Welcome to the 85th episode of Kanga Crypto News, your weekly briefing for crisp, data-driven updates from crypto. A quick note before we begin, everything you hear on Kanga Crypto News is researched and compiled by our expert Kanga analysts using trustworthy sources only. However, this is not an investment advice. New episodes drop every Friday. Hit subscribe and the bell to never miss an important update. And now, let's get started. To start off, December opened with a broad market drawdown. On December 1st, Bitcoin moved below a key local support level, briefly trading under $84,000 intraday. The decline coincided with a wave of forced liquidations across derivatives markets, with most data aggregators reporting $630 million in total liquidations over 24 hours. Ethereum and major altcoins followed the move as long positions were closed at scale. Such liquidation clusters typically indicate a rapid removal of leverage and temporary liquidity contraction, reflected in wider intraday spreads, reduced open interest, and shift toward low-risk positioning. A contributing factor to the speed of the move was global macro pressure, particularly from Japan. In the same window, markets reacted to rising yields on Japanese government bonds. 10-year JGB yields moved toward the upper end of recent ranges, with auction levels reported near 1.88% and comments from BOJ Governor Kazuo Ueda that increased expectations of a potential policy adjustment. This contributed to volatility in the yen and partial unwinding of yen-funded carry trades, creating a broader risk-off environment that affected equities, credit, and crypto simultaneously. On the corporate side, Reuters reported that Strategy, one of the largest public holders of Bitcoin, cut its 2025 earnings forecast amid the weaker BTC price environment. The company's stock moved lower following the updated guidance. This highlights how BTC price fluctuations can affect corporate balance sheets and near-term financial expectations for firms with large crypto exposure. In terms of sentiment, market commentary and trackers pointed to a clear cooling. Several desks noted that indicators moved back towards the fear zone after the liquidation event. Analysts highlighted the 82 to 84K range as an observed support area for Bitcoin in the short term. A sustained break below this region could lead to further deleveraging, while stabilization above it may support a consolidation phase or short-term corrective bounce. Funding rates and open interest remain the primary metrics currently observed for confirmation of either scenario. From other news, several major exchanges including Upbit and KuCoin temporarily suspended WALD deposits and withdrawals due to a scheduled Worldcoin network upgrade/hard fork. Trading pairs remained active, but transfers were paused until the network confirmed full post-upgrade stability. This type of suspension is standard procedure during hard forks to protect users from failed transactions or replay attack risk. Additionally, BitGet announced the completion of the Town smart contract swap, issuing new tokens to users at a 1-to-1 ratio. Following the upgrade, the exchange re-enabled deposits and withdrawals from Town. The purpose of the swap was to migrate the token to an updated contract structure, improving security and enabling future feature developments within the Alt.town ecosystem. Last but not least, market data from the late November shows growing investor interest in quantum-resistant cryptocurrencies, assets designed to remain secure even in the event of a future quantum computing breakthroughs. The sector's combined market capitalization reached several billion dollars, led by projects such as Zcash, Starknet, and quantum-resistant signature-based protocols like QRL-related tokens. While the category remains relatively niche, the increasing capital flow suggests that long-term security and post-quantum cryptography are becoming more prominent themes in blockchain development. So, for the quick summary, this week BTC dipped under $84,000. $630 million in leveraged liquidations hit the market. BOG/JGB linked macro moves amplified the drop, and corporates like Strategy adjusted earnings guidance. Short term, elevated volatility. Long term, narrative remains unchanged. Adoption paths and on-chain fundamentals persist, but macro now matters more than macro before. That's it for the 85th episode of Kanga Crypto News. If you enjoyed the episode, please like, share, and subscribe to stay current with the latest news. As always, stay informed and stay ahead in the blockchain world. See you next time.
We are Kanga, beyond crypto.